Okay, guys, it's Chains here. I'm going to be recording another video. It's February 20th, 2017. Um, so, I'm just gonna jump into it, I guess. Um, so, this is Mosey, Mosy. Um, oh shit. Hold on, I'm making a pizza. So good. All right, sorry about that. It's got to cool down for a second. Ugh. Probably just edit that out later. All right, so let's see. Okay, yeah, I'm just gonna jump into this, guys. I'm new to making videos, so like bear with me. Okay, so I basically wanna just what I wanna do for my channel is basically review like the biggest gainers of penny stocks every day. So we got like I don't know, just looking at that, it's like 20 or 30, probably like 30 to 35 stocks that are up. That's probably about 30 that are up over 10%. So anywhere from Ship to Mosey, I'm studying them to try to make money. Honestly, be nice to make some money one day. So I figured that if I just study these stocks, draw Fibonacci levels, kind of study how they move off the moving averages, look for pullbacks and breaks of higher highs and things like that. I can find good statistical moves eventually, and get some cool patterns under my belt. And that's basically my ambition. I mean, right now is to get better at trading. So I'm a customer service rep for a phone company, and I basically work a 9 to 5 right now. So when I get home, it's nice to start studying the charts and stuff. And I mean, it's just so boring. I decided to make videos and stuff while I'm doing it to kind of keep me from dying of boredom. And plus, I've always wanted to make videos, and I was like, well, I'll just make videos when I'm rich or something like that from trading stocks. But I mean, it's just harder than I thought it would be, and I feel like I know a lot that can help out people that are trying to do the same thing, and I can maybe shave some time off their end, and I can get better myself while I'm doing it. But I feel like I'm really close to making money. I know my way around a chart now. It's not like craziness like it used to be. I don't get a headache at all when I look at it. I remember when I first started, I was getting headaches, and that was kind of a big thing for me. Is that I just kept getting better. I was reading books and stuff. I learned things like Fibonacci, moving averages. I had all kind of indicators. This is nothing really. Um, I had RSI, stochastics, Bollinger Bands on Bollinger Bands. I had 15 different what was that called? I can't believe I can't really get a name. I had 15 of those MACDs. Yes, the MACDs. So I had 15 of those, one for each interval, time interval. So I mean, I was pretty into trying to figure out what works or not, and really I just settled down on just price action along with basic technical indicators like Fibonacci levels and moving averages, and then I like Elliott Wave. So Elliott Wave, it's a good book. You need to read the book if you haven't. But it's basically some guy lived 100 years ago, and notice patterns, and I'm sure other people noticed it before he did. But like the market moves in waves, so you got your first impulse. I'll just explain right here. So you got impulse one, and then pullback, and then break of that high. That's impulse two, and then another pullback. It's pullback. Th- Wait, sorry. That's impulse one, pullback two. That's impulse. I mean, technically it's impulse two because that's pullback one, but I just kind of like this. I kind of like one, two, three, and then this is pullback four, and then this is impulse five. So like, I mean, was they say like the third wave is like supposed to be the biggest, but for some reason on penny stocks, I'm either counting them wrong or like I'm just noticing something that these stocks behave differently. But the fifth wave is pretty big, honestly. Like I'm thinking it's because most people are waiting for a trend to happen before they buy, so they just jump on to the fifth wave and just ride it, and then you know, I mean that. So some people that's the third wave, but to me, that's clearly a first impulse and a pullback, and then a second impulse and another pullback, and then a third impulse. Um, I mean, you can even like subdivide it, but I mean, like once you get better at counting it, it's like uh, you can just start over from here. So like say like that's one, two, three, it failed, so it's no longer like Elliott wave. So like this would be one, two, three, four, five, but it failed. The fifth one failed, going to the downside. So now it's no longer Elliott wave. So you're counting again. So one, two, three, four, five, failed again. So no longer Elliott wave. So you restart. So one. So like there's a bunch of like failed little waves in here, and it coincidentally this is a triangle. You got like you can like draw a line. Oh, I can't draw a line. It's a picture, but you can draw like a line underneath this and a line on top of this. And I mean, I guess I can get into mm, you know, edit, photo edit and like draw. But I mean, you can just follow my mouse. I don't want to like mess the chart all up. But this is a triangle, and I mean, it's also like a bunch of failed Elliott waves, and you can see how like it breaks above. Like some people, that's like, this is a breakout, of a symmetrical triangle, or pretty symmetrical triangle, and this is like what I've always like wanted to buy right here. And you can see this one thing went up 54%. So it was like what 280 when that happened, and it was there for like several minutes, and you'd have been risking from like 280 to 260. So like that's a lot to risk, 280 to 260, right? Am I thinking right? 280 and then down to 260. That's right. And so like that's like 5%, No one wants to risk 5% on a trade. But I mean, here you could have got the entry for like 3 or 4%. But I mean, with these stocks, I've found that like anywhere from like 3 to 5% is a good risk level, because you can put your stop right here. So if you were to buy right here, you'd be like risking 5% because you'd be out the trade right here at a loss. But if you would have bought like right here, even right here, like when it like made that little bump, that's still bullish. I mean, even if it didn't connect on the chart, it's just like, you know, little dots. I just draw the I just draw it like a line chart, just connect the dots, and it's bullish. And so like, that would have been like a 3%, 2.5% risk. Um, Forgive me if my math is off. It's kind of hard to do math just by eyeballing it, but somewhere around there. And look at what you would have made. You'd have made like, freaking almost 100%. No, you would have made like, yeah, like almost 100%. Uh, it's crazy. I don't know why it says 54% because look, that went from 2.8 to 4.2. 2.8, 4.2. I guess it's like 50%. I don't know. I mean, I'm pretty bad at math, but I've gotten a lot better at these percentages. Like, it's not that bad, like, to like pick it up. So like, let's just go through these charts real quick, knock it out. So we can see it tested the 1618, and then it came back down, pulled back to the. I'm not quite sure what Fibonacci level that is, but I think it's like the 60, 618, and then it comes up here and you know tests the 2618 and then the 3618, and it's probably testing like the 423 or whatever that one was, and right there, and then it's coming back down. It's pulling back to the main point is this blue one. I think that's a 75 moving average. Yeah, that's a 75, if I remember right. It is right now. And then it comes back up to the 4618, and then just trails off. Tests that again, and then it fails. As soon as it made that lower high right there, I mean, me personally, I would just have my stop right here, just because like, I mean, I don't have very many trades, I'm not like rich or anything like that, so like, I can't afford the $25,000 limit. So I only have like 3 opportunities a week to trade these things. So what if it would have came back here and then went back even higher, So I'd rather just put my stop right there, and hope I don't get stopped out. But I have found though that like trying to go for the high, like right here, like I'd be happy with 50%, like I'd be like super happy with that. So I would have just taken profits. Like if I was smart, like I would have taken profits right here. So like what I was doing was probably not the best thing, and that's it's just something I can improve on. So like these things go up like 50%, usually, but sometimes I see them go up like 100+%, and it's not really that rare. Like it happens, pretty often. Like maybe like twice a week, once or twice a week. And anyway, so I came back to this 200, tested that 200, and whenever something tests at 200, like I've really noticed that like it generally will fail. Like if it breaks that 200 test, like say like it tests it and then comes back up, it gets caught at the moving averages that trail behind it. If it's catching, those moving averages and it makes a lower low, you want to be out the door because it's just not good, like, so like, yeah, like, I'll just go through all the gainers today. So what I got, like, all these to get through. I'll try to rush through them, honestly. I'm not trying to do this forever. But like some of these charts are really choppy, I'll take screenshots of all of them, and even if they look like crap, My pizza's probably getting cold, but I just want to finish this. So like, but even if it's choppy, it still tested that 1618 from this impulse. I'll count them, like goes through. It broke this low right here. See like right here, it you could have. You were waiting for a break, and so like you could have drawn something right here, but I just drew. I don't want to clutter up the screen, honestly, with like a bunch of different Fibonacci, tools. So like Fibonacci expansions. So like I'm really just drawing the Fibonacci to see how like it tests, which one it tests the most, because I want to get that data, because I can compile all this data in like a big spreadsheet. Like when I get like a few thousand charts, I'm thinking, and I could really find out like what is the most like statistical moves, and like that just kind of like really like makes me feel like happy to like find out. So like, yeah, like this little move right here, this impulse, see how like it's coming back down, made a lower high. Well, like right here, when it broke that high right there, would you take a Fibonacci? You kind of count that as impulse 1, pullback 2, impulse 3, and you would draw a low, high, low off that impulse 1. But say like if it kept going down and then didn't, well then you do the opposite and you do, high, low, high, and for like a negative trending stock. But for a positive trending stock, you go low, high, low. So it's coming up. Pull back, come up more. It keeps testing these Fibonacci levels, and it's pretty cool. It's like a $3, went from $2, went from basically like mid twos to like $4 the other day. I think what day was this? February 17th. So like this was like the last trading day. There was a today's the 20th, but um it was um it was a holiday, so the market was closed. So I mean I was kind of happy honestly because I was kind of behind on my work at work, so I got to come home and didn't have to worry about just adding onto my workload. I could just review stuff that I was supposed to review like last Friday. Okay, so anyway, so we're going up and it pulls back to the 35. No, that's the 50. I'm sorry. It pulls back to the 50 and then it breaks past the EMAs, but it fails. It fails again. That's a negative sign right there. If something fails like that and then comes back down, um, I mean, this stock has a high probability of like, you know, making a lower low. So like if you're trying to make money on the way up, it's not a good bet. But you can see like came back up. I mean, it has like an equal probability of being a trading range too. Like I mean that's what I meant to say. Honestly, you're not gonna make money thinking that it'll break that high. Like if anything, it'll come and test that high and then come back down. Like I've noticed that, especially after all this move right here, this bullish move. Like you don't want to bet that it's just gonna like reverse, but you can after seeing it like fail like right here and then break this low. It just made a lower low, so you can basically bet that it'll be a trading range or like a downtrending from this point on slightly. Um, I mean, they do also like go and make higher highs and stuff. Like it happens, fairly often. I want to gather data on all that stuff and see like exactly how often it happens. And you can see like it really did form a trading range. Um, with these charts, like I mean, they're all like after the fact. So like I'm giving commentary on this. Uh, you know, I I really don't trade that great, honestly, but I mean, I trade better than like an average trader. I mean, average traders trade like horrible. I trade like, I mean, I trade good, but good isn't gonna really make you like rich. Good is gonna like keep you from like losing your shirt, and you won't make any money, but you're not gonna like you know lose everything. But I mean, really, I just didn't have any luck, honestly. Like some of these things, like right here, I'd be looking to buy, and then it came back, and it would have stopped me out at the end of the day, and I could have took profits like here, but I would be holding on, thinking that it would go and make a higher high, just something like that. Like that's how I trade. Like I'm like above average, but like you have to be like in the 90 percentile to be making money in this game, and I'm not there yet. I'm probably in the 70 or 80 percentile. That's where I would place myself. So I mean, it could be worse. And I've gotten a lot. I've got like 8,000 times better. Honestly, I was pretty bad when I first started. But I mean, you can see how these like Fibonacci levels. I mean, they're almost like magic. Honestly, like its price is drawn to those levels. Off this little move right here, that's where that extension came from. And you can see it broke the. I counted it like right there when it broke. Here, this is the break. So this move right here was what I was measuring because it broke right there, made a higher high right here. So you just take this as impulse 1, pull back 2, and then impulse 3. So you just take impulse 1. Forgive me if I'm doing the Elliott wave wrong, but I mean it's pretty close. Yeah, see, like a lot of this stuff is choppy. It even still like got pretty close to that 1618 though, towards the end of the day from this move. I got to eyeball that pretty heavily, like trying to figure out. See, like it's going up, and this is downtrending. So you see like impulse 1, pull back 2, impulse 3, it broke that high. I mean that low made a lower low, and then starts to go down more. It was making. That sucker will be like 15 cents before too long. So like let's see here. Okay. Yeah, this is a pattern that I've been like trying to trade. So like it'll go up and then test this 14, this pink EMA. That's the 14, and then it'll I'm looking for it to test the 20 and then keep going higher. But if it falls back, I mean it's no big deal. It's just a minor sign of weakness, but if it can gain ground, just off the 50 and then like get back above the EMAs, I'll look for like something like consolidation, slightly moving up. Like right here, I'd be looking to buy, so I would have been in here, and I would have put a stop right here. So I'd have been like risking like if this is like 70 cents. I kind of stay away from these just from like lessons learned. They're kind of erratic, and I mean it's a good way to like you're right. It's like some of the moves are like risking like 10% of like your bet. Like I don't want to risk that much. Ugh. Okay, so all right, so we're going up. Like this is where I saw like because this is a huge move. It's $100 stock, $120 stock, and Fibonacci levels work pretty well. Holding up on that 1618 to the 3618. Honestly, I want to say there's another Fibonacci level that it's bouncing off of. I'm just don't have it drawn. There's a certain amount I can have. I have like 15 of them on there, and it won't let me have any more than that. Otherwise, I would have like more. It would look crappy though. It would look like really cluttered. Yeah, I mean, let's see. Going up some more. Pulling back. See, like test here, lower low, and then a lower low, but then it gathered momentum. So when it starts to make like a line, horizontal line, like trending up along the moving averages, like that's a good bullish signal. And then look what happened. I mean, people really look at that, People do look at that and they buy it. So like this is one of those like weird ones where like I guess news came out, and I mean I don't really play news, but I never play news honestly. I like learn my lesson. Like, that's how I started, and it's just not not worth it. You can have like the best news and like the stock just crashes for some reason. But yeah, I mean this kind of didn't really do anything. It didn't fit any of the patterns that I've really looked at. I always want to see a bounce off the 14 first. If there's no bounce on the 14, I'm not looking at it. I want to see a bounce off the 14. If it has to wait to the 20, I've just seen from what I've seen, it doesn't do much the rest of the day. It'll turn into a trading range or start downtrending. Not to say every single time that doesn't happen, but most of the time. I want to get stats on that, but I just don't have that data yet. I'm trying to get that data right now. So like, let's see. Impulse 1, go back 2, and then a higher high. So I'd be drawing low, high, low off that. And that's where I get that from. And you can kind of see, there's probably one, it's probably that 300 level right there, honestly. Not the 300 level, the 200 level movement. And the 200 and 300, I wish I could have those on there because people use those too. All right, let's see. I'm so tired, honestly. I worked so hard today. I want to go through and like talk about every little pattern I see. Like, let me just look at the major ones. So like, see how it tests off that 14 EMA, and then it came back and tests off the 20 EMA, that blue line. So it tests out the pink line and tests out the blue line. I'm looking to buy like right up in here actually. I'll put my stop right there. So I'll be looking to make this, and I wouldn't have got stopped out. It would have turned into a trading range after this, but I mean like that's what 375 to like 394. It's not bad. I mean it's like 10%, 10%, something like that. From the high. If you were to just wait to the close, it'd be like I think like 8%, honestly. Okay, let's see. This pattern. I don't know. I don't ever trade these illiquid stocks. Like when it's got like crap on there, I'm not looking at it. Honestly, I just have it for my records, so I'm not gonna study that. Okay, this is like a pretty like heavy stock, but it's like $50. I don't really want to look at that one, but here, let's go. So it's getting up here. So I broke the previous trading range. So I'm drawing off that impulse off that. So got that 3618, 461. I honestly got all the way to the 8618. And I mean, you're looking to make like, what's 46 to 49? Like, that's like, I mean, that's like 5%, I think. That's like big money if you're like managing like millions of dollars. Like, that's huge. But for me, that's nothing. Like, I mean, it's just not worth it. And having to sit through this all day, um, like I'd rather be trading penny stocks where like they can do this in like an hour. Uh, yeah, that happened in like 3 hours, and it'd be like 30%. Like not like 5%. Okay, like let's see. Okay, so fail, fail, and then no. See, like this bullish bar happened right here, but after a big bull bar like that, I mean, a lot of times they're a trap. Like unless you see like follow up, but if you see follow up, then I just wait for a pullback. I don't want to risk crazy amounts, and this is only like $15. But just looking at the chart, like just don't worry about the price. Just look at the chart. Like it's kind of like hard to hard to risk that much. Like look, you're standing to like I mean, if that turns into a trap, which it did, um, I mean, you just wasted your time and probably some money if you bought at the end of that. You wasted like, if that was pennies, that was like a dollar and that was like 80 cents. You wasted like a ton of money, you know. So like you don't wanna like you wanna wait for confirmation sometimes, and if not, and if the confirmation happens, then you wait for a pullback and you get it. Um, okay, so let's see. This is a bullish signal. See, like you can like see how there's like nothing happening, and then it starts to get above the moving averages, and then this happens, and then confirmation happens, and then a pullback happens, and then another confirmation. Well, at that point right there, you'd be buying because the pullback happened, and then it's time to buy again. So like you put the stop right here, and then you're going. So you're only risking this much instead of like risking all this. So like that's how to play those moves. Um, okay, so like let's see. This is crap. I don't even want to say that. Crap. Honestly, like I'm getting to like crap stuff. I'm getting tired too. That piece is probably cold now. Honestly, like that kind of depresses me. Uh, where did this come from? I mean, like this is my pattern too. I was talking about like test out the 14 and then test out the 20. But after it, tests the 14 and then tests the 14 again and then makes a new high, like this is really the move, and it had just happened. Like it never really pulled back to the 20. So when it starts to handle at the 20, you want to kind of stay away from it because it had already moved. Like if it hits the 14 and it makes a new high and then pulls back to the 20, that's really more like the pattern. Like this is like overextended, and I mean it's not a bad pattern. You still have to, it's still risk. So you used to be buying right up in here and then putting your stop here. So you'd be risking this to make that. I mean, it's still worth it, but like there's better things to occupy your trade with. Like there's better trades out there. Okay, let's see. Do, do, do. Am I like okay? This is the last one really. Okay, so it's downtrending and then it breaks this previous high. So like I draw an impulse off that. Um, and you can see how it fit. And yeah, so I mean, see how like it came back and touched the 200 and then started climbing, and it tried to touch the 200 again. I mean, it's not a horrible sign if it tests it again and goes up, but like it's still a sign of weakness. But see how when that failed, it's a pretty strong sign. You see how it shot off, and you want to be buying up in here and then putting a stop here. But like for over here though, honestly, like catching this, see how it bounced off the like that's like textbook what I've been like looking at, bounce off the 14, and then it never gives you a chance to get in. So I would have like honestly, like I haven't really studied this pattern right here. It seems like it happens a lot. I just don't know enough about it. But when it comes back here, I don't expect it to bounce off the 20. Honestly, it'll fall through and get a deeper moving average. Um, but I'll wait for it to. This right here happens all the time. Come back in, test the moving average, and then come back, and then get back above the moving average if it's still a strong trend. But this right here, you don't ever want to like bet on that because it'll usually get below the moving average, test the moving average, get make a lower low, and then it'll like start climbing again. This for some reason is so high probably. It's like honestly, it's like 8 out of 10 times it's gonna happen. Like really, like I've really looked at that. Like it's 8 out of 10 times that it'll happen. But look how often it happens. Like twice a day. You know, like if you were to wait for that and then be like trying to short, uh, I mean, you could trade like that. I mean, I'm sure people make money doing it. I just don't have the patience for that. I mean, my patience is awful. Um, okay, so like, let's see. So right up in here, you want to be buying. You put a stop right there, and if it climbs, it climbs. So there we go. You would have made money. But I mean, that's done for the day. I don't want to study the losers, the biggest losers. I got those here. Let's see. See, I got the losers too, but I mean, it's just I feel like how long is this thing been going? Does it say? Oh, 30 minutes. Yeah, it's time to wrap this up. Like, I feel like it's just way too long, honestly. I need to get it. I mean, it'll probably be about 30 minutes at a time. But let me stop this recording. This was fun. Um, I'll do some market analysis next time tomorrow. So very excited. All right, let's do.